We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up CHF, JPY. We are on the 12-month time frame. Price action last candle to right hand side is a bullish green candle. Current price is sitting at 151.309. So if price action pushes up, we're going to see if it's going to go off the previous side. So we're looking for, first off, we're looking for the highest high of structure, green and red. So those numbers sitting at 150.87. We can see price is trying to break that area. Let's also grab that low, red and green, near the numbers of 65.006. Adding the midpoint in the middle, gauging the numbers between 105.951. And we're going to add a zone for second level highs. So that was like a midpoint within that area of the high and the midpoint second level highs, which be stopping at the numbers nearing 128.119. So let's read the market to see what's going on. So if price action pushes up further, we can see price action can fully break out of that highest high resistance line. So if this market pushes up, we're looking for a break and retest. So if we ask ourselves where the market's coming from at the low, so let's say we go all the way towards the bottom, which push that market up to that high. To the left side, we have a double bottom. To the right side, we have another double bottom. In the middle, we have the solid head. So you can read it as an overall left shoulder, a head, a right shoulder, all together, double bottom and a retest, or a triple bottom, head and shoulders pattern. Market broke out of that area, retest, and we received one push. It also broke the second level highs area, and we had one big push up to that high. So now we got to figure out what's happening. As the market is going to identify consolidation, a break and retest, or a bearish red candle can engulf, come back to retest, and create an M pattern or a double bottom, a double top. So whatever's happening, we're looking for that market to identify patterns somewhere at this high. If the market comes down from this area, let's see what the patterns that could be identified. So when the market did come from that head and shoulders pattern towards that low, when market spiked up, this can be the area. So for the first leg, second leg, third leg, if we receive a bearish red candle in that area, market can drop that market down. It can go level to level, or it could respect this level and work its way up. Before that market to see is going to drop fully down, it has to close out below the bottom of this area, which will be near the numbers of 111.428, which would close out the formation of the M pattern. And then we're looking for the break and retest, so that'll be after the midpoint, and see if that market's going to drop back down unless it works its way back up or consolidates. And also you can read it as a whole, left shoulder, or let's say left push up, right push up, all together. First candle of the market, bullish green, pushed up to a high, first leg, second leg, third leg, and market could drop down and create a huge double top. We're going to wait to the 6-month time frame. So price action on the 6-month time frame is reading as a bullish green candle. Second last candle is a bearish red candle, which is a doji. So it's retesting, and the market pushed out. So if you look at the pattern, what happened below, when the market did push into that range of the second level highs, it came back to retest. It created that first leg, second leg, third leg, and then market pushed off the midpoint, went through the second level highs, came back to retest that near that second level highs level, and then pushed up to overall high structure as of the previous side. So that means we have a double bottom, a retest, and one push. Now we're waiting to see if that market's going to fully push out. So far this market's consolidating because it's inside the second last candle, side by side. So we're going to see if it's going to follow with a bullish green candle to break out of that second last candle. So that's when we'll be looking for the break and retest to see if it's going to push up further, or unless it's denied and market drops down with a bearish red candle. 3-month time frame, price action, bullish green candle. So we do know that it created that double bottom at the midpoint before pushing up. We have a pattern that's trying to form itself here. So when the market broke, it's still identifying that retest and the push got up to the high. If it comes down with a bearish red candle to at least engulf the price action and work its way through the second last candle body, it'll create an M pattern. So it'll be coming back for a retest at that second level highs. So still looking for the engulfment towards price action towards a second, third, and fourth to last candle in the market. So if we grab the top of those bodies and wicks of those previous candles, we look for the market to break out that square we just created. Walking down to the monthly time frame. So price action monthly time frame is identifying a retest. So we have a retest. So we're going to see if this retest is respected for a follow-up with the bullish green candle. If so, if you ask yourself where market's coming from, created that pattern for that first, second, third, fourth, double bottom, retest with price. Now we're looking to see if it's going to follow with the bullish green candle on that monthly time frame to start working its way up, unless that bearish red candle start pushing down, or a following candle to start working its way down. Walking to the weekly time frame. So price action weekly time frame is a retest candle with a bearish red doji. Second last candle is more of a huge doji, but still push up. It's still pushed up, so it has wicks up to the top, wicks up to the bottom. So that market is identifying it may be consolidating, and it did with the price action candle. Right below that, we have the double bottom. So we see the first, second, third, fourth still reading as a retest, and we're still waiting for the market to decide if it's going to consolidate more, push up further. Now we're on the daily time frame. So price action being a bearish red candle spiked down to a low. So we're going to talk about that and what's happening. Before then, let's head over to the second last candle in the market. Let's create a zone around that candle to the top of that wick and the bottom of that wick. Let's go across. Now we can see that the market did go into an area, so we can see that market, let's say if it drops down and breaks through, it can identify the first, second, third, and then create that M pattern. So when market breaks near the numbers of 149.679 and closes 670 and closes out, it can create that M pattern. So you look for the break to retest to see if it's going to push down further. But we do know we have a bearish red candle for the price action candle. So what this is meaning is that the price action candle is basically tagging that SR line that we created, sitting at 151, sitting at is at 150.287. So what that reading is, if it's respecting, then we'll see that market creates that first, second, third, fourth retest, and that's what it's touching. So that spike down to that low is basically retesting the previous side of the double bottom. So we have a double bottom, a retest. We're going to see if it's going to follow with the bullish green candle, and you'll see a double bottom and a retest and a push. If it receives an engulfment, if not, that market can work its way down. 4-hour time frame. Let's take a look at what happened in that zone. So that market pushed up about 1, 2, 3, 4, 5 days ago. Market pushed and broke out, created a double top at the area, multiple retests for some days. So the 5-2 and 5-3, the market consolidated, received a push up to the top with the 1 p.m. candle, and the markets just went through that zone. So market's coming from a double top and retest and worked through the market and went through the zone. So when the market went to the zone, it's still identifying as an overall double bottom retest. Now we're going to see if that market pushes up. So if this market pushes out this area and works its way up, we want to see it breaks above at least the midpoint of that zone, which would be near the numbers of 151.624. And also you want to see price action engulf the fourth to last candle of the market to push that market up. So you can take it towards 151.470 or grab the top of that wick for the market to push out of 151.816. But anything in that pattern, anything within that area, you can see the pattern form so far as a decline W. So if it respects that decline W and pushes it for a break and retest, you can see that market work its way up further. CHF, JPY.